got you. I'll share my screen. How's it going? How's it going?
Oh, yo, we live.
We are live,
We live.
Skull. How you doing? How you doing?
I'm good, man. Chill. How you doing, dude?
I'm doing good, man. I'm doing good. Can't complain. Busy as ever these days. Um, what's where you guys? Where you guys based out of?
Right now, I'm actually in New Zealand. It's where I was born, but I usually work out of Southeast Asia between Singapore and Bali, or I have for the last 14 years. But we just had a kid. Another kid's my fourth. So my partner wanted to settle down somewhere quiet for a while.
We hear a lot of people, the digital nomads going to Singapore and Bali. How do you like your time over there?
It's great. I mean, I've lived in Bali for like 14 years. It was just beautiful, tranquil, quiet, but social media kind of ruined it, to be honest. It's just gentrified as hell now.
Really?
It's super busy. We actually relocated our family way up the west coast to get away from all the hot spots and made a bit of investment up there on the land. So yeah, Singapore is beautiful though. I always enjoy it. You kind of have to if you live on Bali, you kind of need to get off the island back to the big cheese every now and then. Otherwise, you go a little bit island crazy and get a little bit complacent with life, you know?
I hear you, dude. It's a beautiful area. And if you don't mind, could you send us your Twitter just so we can have that pulled up during the whole thing? For some reason, I'm having trouble finding it right now. Or do you have your
Or if
handle?
you'd like to share that, if you'd like to share your deck, if you'd like to share that deck, you can share that as well. I think that would be awesome if you're open to it.
You and Jill
Yes.
had a discussion prior to this, correct?
Yeah. We had a good hour-long chat about everything.
Yeah, and it was I think what they're working on is really really cool. So I want to definitely make sure that like we get as much information out there as possible. But you let me know what you can share, what you can't share. But I'd love to get some of that information out there. I think you guys have a pretty cool protocol.
Yeah, thanks, man. No, we're like full steam ahead from now on. So happy as to share it all, I guess. You want to kick off, I guess?
Yeah, let's do it.
Let's
I
talk a
think
little bit more about your background and we'll start there.
Okay, easy. I've got a background in economics and finance. I got into the crypto space in 2014. My friend told me about Bitcoin back in 2011. I read the white paper, didn't really understand much of it. About 2014, I went all in. I've been really strong in the DeFi space for years. It's kind of where my forte is at. And we backed over 100 projects through my family fund, Matt Capital. Seen it all from the space, from sort of all vantage points as a builder, as a user, and as a VC. Yeah, and honestly, I've been sort of dedicated to product market fit. What I sort of geek out on most is sort of the tokenomics and economic architecture of all the projects. That's kind of where my strength is. And that's kind of what I've built in Pantheon. It's sort of the summation of the last 10 years in crypto, seeing what works, what doesn't, and seeing what needs to happen. Yeah.
Awesome. So kind of how did that all kind of lead to Pantheon? Tell us a little bit about the origin story there of Pantheon.
Yeah, so I was just a passive investor for years. And then I was part of a collective build on a DeFi protocol. We struggled with user acquisition. And then I looked into gaming as well. I kind of always assumed that my TradFi associates would always just flood into DeFi once the primitives were more mature. But I noticed the more DeFi matured, the less interested they were. And you kind of realized they were never going to be our power users anyway. Started looking at sort of where's the real lifetime value customers, and it's sort of all aligned and or converged along the concept of gamers. They sort of mirror the same habits as most DeFi users. They already deal with sort of native currencies and games and stuff, and obviously they're a large untapped demographic that are very progressive, money hungry, because there's a lack of opportunities outside of in the traditional world, I guess. So I built Bigger Arcade. And the whole basis of it was really to provide the economic infrastructure for all games to work on top of. Because if you look at most Web3 games, they all suffered from the same sort of hyperinflationary issue where they just pay out tokens in order for people to come play their game, and the idea that they can retain some of those gamers to actually spend money. Problem is they were all missing just a really functional, scalable revenue layer. So we built that. Now, after that, we spent about $1 million on user acquisition in a single calendar year. We worked with the best of the best, supposedly. The top user acquisition agencies, the top creators, the top marketing agencies, guilds, quest platforms, you name it. We worked with them all. What they didn't know that we had built our own backend analytic engine, so we could see the exact user behavior as they entered our system. And for the $1 million spend, we received about 4 real gamers that actually stuck with the program. So that's like a $250,000 per head acquisition cost. Sorry.
Jeez Louise.
My goodness.
And that, like, I've been in the space long enough, so I'm not what I would call naive, but I was actually quite naive as to the extent of how bad some of these ecosystems had gotten. And Web3 gaming is by far one of the worst. And that really pissed me off because I was very proud of what we built at Bigger Arcade. It works. We had this thesis that we could create an infinitely scalable revenue system, and it works. All we wanted to then do was onboard users. And to spend that kind of capital and just see it all go to waste was just fucking lit something underneath me. So for the last year, I worked with a bunch of partners in my network, and we put together Pantheon, and Pantheon's just the solution for honestly all of it. We've solved distribution in a way that nothing in the space can really compete with. It benefits both projects, it benefits creators, and it benefits their communities. It's a perfect win-win-win alignment of incentives. And you don't even need trust because everything's on chain, transparent. And like I said, the incentive layer is there where you'd just be stupid not to do it in this fashion. And how all that works, we can get into in a second.
Yeah, no, let's actually get into that. So walk us through how exactly you align the incentives. How have you built this solution? Maybe start high level, and then we can kind of work our way down.
Also, can I butt in real quick too? How would you, if you had to describe Pantheon in a one-liner, would you describe it as a launch pad? Would you describe it as a standard? Like how would you describe Pantheon?
Yeah, we've got a working title, but I'm calling it the success primitive. And the thesis is this, right? I can complain about individual actors or whatever, but there's an overarching theme that's an issue, right? Is we have 40 million tokens in the space now, and I think we're still minting close to 1 million a week, even though the whole meme coin cycle sort of lost a lot of its momentum. The emissions, it's just huge, and we don't have enough capital to sustain that kind of growth. It's total saturation, right? So with 40 million tokens, that presents 2 core issues for all of us. Doesn't matter if you're a small investor, big investor, builder, we all share the same issues. 1, capital is spread way too thinly across way too many projects. And 2, attention or mind share is spread way too thinly across way too many projects, right? So that makes it hard for even legitimate projects that are, really robust tech architecture, really onto it teams. It makes it hard for even them to get any traction. And even if they get traction, it's very hard to sustain it because there's so much. The rotation meta is very strong, right? Barely anyone holds assets anymore because it's been negative EV to do so over the last sort of 12 months. And so if we look at that, what's the other problem there? Well, if you look at the entire crypto stack, right, we've built an entire industry of projects and primitives that are designed to create and deploy tokens, but nothing was built to make them succeed. There's nothing in the space that's built to make tokens work over long term, build something scalable, robust. And that's exactly what we built at Pantheon. So that's the whole thesis behind us being the success primitive. We do have a launchpad facility in our platform, but we are specifically and uniquely focused on what happens after your token's live.
Can you walk us through how you implement this success primitive to make these 40 million tokens have some sort of intrinsic value?
Yeah, so we're not actually trying to make every token have value. What we're trying to do is take the 40 million tokens out there and condense them, completely contract all the noise down to 400 to 1,000 better high-performance signals where users can get broad sector exposure to a bunch of high-performing assets that have been curated by very smart, well-networked people with the access to the information and the sources. to outperform the rest of the market. So the idea is to shrink the noise of 40 million coins into 400 better signals that capture the majority of the attention, majority of the revenue. Simple as that, just outperformance. Now, how we achieve that is very different. So there's 3 pillars that make Pantheon what it is. Okay, first and foremost is we do have a launch pad, but our launch pad's very different from everything else. With every other launch pads, we go to bed on a single team project in their one single attempt. Now, we have a 99.998% failure rate in crypto, as in that's the percentage of projects that will either fail to generate revenues or any sustainable liquidity whatsoever to make their token valuable. That's horrible odds. So every other launch pad offers that. Buy this 99.998% fail. What we do is very different. We exclusively launch what we call creator indices. And what they are is a brand new asset class that lets you take more shots on goal with a lower risk, essentially. So on every other launch pad is where you go to bet on a single race. On Pantheon's where you go to buy the entire horse. And what I'll do is I'll explain it based on your terms. Now, when we say horse, it can be team, like builder, or it could be creator. And creator could be all sorts. So a KOL, influencer, technical analyst, or even you guys with your own podcast, right? So we use MCG as an example. And what I can do actually is show you guys the terminal if you'd like to go through the back
please.
end.
Absolutely.
Yeah, we can share your screen for sure.
Okay, 1 second.
Obviously, at the bottom there, you see the little plus computer sign. You just push share screen, and we can throw you up there whenever.
Yep, 1 sec.
Yeah, and while you pull that up, I think that's the core piece that I remember that got me interested. Is it's something different than what's already been out there, and it's more so creating like indices that give exposure / provide value to users. So I think that's really the for me the part that I want to dig into the most, and see where the value is.
When you say indices, are you saying like broader indexes of successful launches?
So similar. It's like, because it's a brand new asset class, we can best align it with something comparative, and that would be indexes. So if you look at like the stock market, for instance, right, during the 1900s and onwards, the stock market exploded and it became difficult for individuals to be stock pickers because there was too many options, lack of information sources, etc. So your return rate just was diminishing because there was just too many options. The answer to that saturation in that market was the introduction of vehicles like ETFs, SP500, and indexes, right? What they do is they take the best performing asset, like the SP500 is the top 500 performing companies, essentially. So you can get a single passive investment into broad sector exposure on a single vehicle. Very nice and simple for all investors. That sets a piece of what we've built, but ours is very different. So I'll get into it. You can see my screen?
Yes.
You're up there. Looks good.
Got it. Actually, sorry, I forgot. I can't actually go into this one. I got the devs working on it right now, so that'll glitch out. Let me share the other.
Okay, I just removed you from the stage. You can just let me know when you're popped up with a new one.
1 second. I'll share something else.
But yeah, the issue that we face a lot today, and something we try to do with this show, is just like there's so much noise, 99.9% noise and fluff, and then there's that 0.1% edge that you can actually have. And finding that, how do you do it? Is it through screeners? Is it through aggregators? Is it through broader based indexes? Like it's very tough to say, and I don't think anyone's really cracked the exact answer on that. Is this screen good to go?
Yep.
Sweet, you're up there.
Okay, so that's a really good question, actually, and you're right. So that's what creators are meant to do. So if you think about you guys, for instance, you guys, due to your exposure, you have an edge over the rest of the market. And most of the market are just sort of following other people, because what we're trying to do is access that person's edge, network, leverage, whatever. Right? That's why people follow you, is for your alpha. Now, what this does is take your alpha and essentially enable people to buy into it. So we'll start off with you guys on Pantheon. Let's say MCG, Microcap Gems. You guys create your own creator index. The way it works is really awesome, to be honest. Okay, So you launch a token on our platform, and automatically it spins up your index. And your index is basically these two wallets here. Now, down here, it shows the composition of your index, which reflects all of the assets in these two wallets. And it shows their weighted, the composition of it and their weights relative to each other, right? Now, the first wallet here, you guys have total admin control over. So if you guys raise like $1 million with us, half of the money, 50% of the funds, would go into your token liquidity pool. The rest of it will get dumped straight into this liquid fund. Now, this liquid fund is your war chest or your treasury. You guys have total control over it to do whatever you want. The goal being, of course, is to use this capital to increase the total value of your index. But also, it's your bank account, your cash out mechanism. So if you build this up to $10 million, you guys want to go buy a house, live happily ever after, this is where you draw the funds down from as well. So the community would see all of this, very nice and transparent. But it's also showing the community, hey guys, these guys have built this asset from this to this. They're going to cash out some. You guys should accept that, and sort of create that mindset that guys, people are meant to get paid along this whole service, and they want to get rich too. The vault is very different though. You guys have no admin controls over this whatsoever. Every single token that is deposited into this vault is vested over a 24-month period and is distributed to your community members who hold your token and stake it against this vault. This is really important because this is distributed in the form of yield, and it's non-dilutive yield. Now, where does all the capital come from here? It comes from all of your deal flow and all of your investments. So let's say from now on, MCG, you say, okay, guys, for every single project we have on our show, we're going to take 1% of their total token supply. We're going to dump it straight in our vault. You guys, as in our audience, you buy our creator token, you stake it against our vault, and you guys get the emissions of all of those tokens over a 24-month period. Now your community members are all getting a yield, right? Paid out over 24 months. So it's a dividend-bearing asset, essentially, but they also have the upside to your growing influence. Now, what does that do? What's really exciting? Not only do your entire community member now get access to your entire network and every single deal flow you guys get, right? But they have a single vehicle exposure to all of it as well. And they get to buy in on your growing influence. And it's changed the entire dynamic. So if you guys were to promote one project, right, and I buy that project, you guys get paid $10,000 or whatever for a one-off promotion. I buy that project. You guys shill a second one, you guys get $10,000, and I buy that second one too. By the time you've shilled your 10th one, I'm getting pissed off as your follower, because now you've diluted all the attention you guys bring to my original two assets that I invested in, and you spread it across all these other ones. Right, I'm now in the backdrop and you're focusing on these new projects. That's the natural decay algorithm of shilling. It just doesn't work. But what we've changed here is now every time you promote something, I know that the yield in your index has gone up, my token value has gone up, and some of your supply has been shrunk as well. So I've just increased my net worth thanks to you guys and every single deal flow you get. So what this does is create perfect alignment between your community and you guys. But better still is for the project. Now the project has an audience that is tethered to their success over a 24-month period, because as that project advances and goes up in value, all their milestones become important because it increases in price, right? Their token will go up in value and the yield goes up in value. So my distributions go up in value. But also that drives demand for your baseline token, which keeps driving up the value of your token. Now, because it's a staking vehicle, people who want to get access to your yield moving forward have to buy your token and stake it. So they're adding liquidity and then contracting supply, driving your price of your index token higher and higher and higher. There's nothing in the space that does that. So and now, one final thing is for investors, you guys become a single exposure vehicle to like all the ICM projects in Solana, for instance. It's just beautiful. I don't have to worry about all the noise. I just buy your token, get access to it all. All the information's condensed into your channel. And anything that I like, particularly from what you guys have promoted, I can double down on and buy more on directly.
Okay, sweet. So let's break down the vault and liquidity. So liquidity, let's say, I think you said you can go out and raise money. How much of that goes into the vault automatically, right? If we go and raise, just call it $10 million, that goes straight into liquidity. How much of that goes into the vault, or none?
None of that goes into the vault. 50% of the funds that you raise will go into your token liquidity pool to foster strong token economy, right? Now your token is liquid. The rest of it goes into your liquid fund because you guys are the proprietor of your asset. You guys also have the access, the networks and everything and all the deal flow. So for instance, you guys could take, if you raise $10 million, you got $5 million in your liquid fund. You could cash out some if you wanted to fund your personal operations or your business enterprise. But also, you'd want to take some of that money and all the interviews you guys do with a lot of these projects, you might be able to negotiate better OTC deals, for instance, for your community that they wouldn't get access to. Me, for instance, if I was to launch my own, I'm a builder, right? So I'm not just a builder, I'm also a VC. So I get really good deal flow. A lot of the projects we buy are sort of 10 cents on the dollar before they go live. So I could 10x. So I've just got something. What was that? So I could, one, deposit some of the tokens from the projects I have vested in, but two, every deal flow I get, I could also invest in, knowing that I'm giving my users 5 to 10x growth by the time they go live.
So just to kind of break this all up, so you raise capital, half of it goes to liquidity, make sure your token is liquid. Another half can be freely invested or freely played with, as let's say that's MCG as MCG
Exactly.
sees fit. Okay.
Exactly.
And so there's one aspect where this is a liquid fund that we can trade, but then there's another aspect where this can also give you kind of like broad-based exposure through deal flow. So there's really like three components to this.
Yeah, that's correct.
Okay. And go ahead.
Who's the main target for this if you had to pin it down?
It's projects, creators, and community, right? So for me, for instance, if you look at who's benefiting here, okay, let's look at the projects. Right now, for a project to go live is ridiculously prohibitive. So a new project, they have 0 followers, no one knows about them, but they've spent 6 months building an amazing MVP. What's their go-to-market strategy? You can work with marketing agencies, okay, $10,000 to $30,000 per month, and they don't do anything, right? You can go to launch pads. Okay, you pay a lot of money up front. Usually they take 5 to 10% of the total raise, 5% paid in cash up front, the rest in tokens, right? Most projects don't have that capital either. Most launch pads are ineffective. If you invested in any launch pad TGE over the last 12 months, well, not last month or so has been improving, but the 12 months prior to that, 94% or 70% below their TGE price. So it's just terrible. The liquidity is even thinner, right? So it costs you this is just agencies, user acquisition. You give out a bunch of tokens to Quest platforms that just gets farmers that dump your token, right? It doesn't matter which angle you go, you always need to go through creators. Now, most creators, if you want 10 of them with legitimate distribution, it's going to cost you about $20,000 to $30,000 just for 2 posts and 1 or 2 engagements. And engagements is they follow or retweet or like a post. That does nothing for your token. Everyone knows the game, so they know it's just sort of a paid shill. So they know it's not really a conviction play that I should buy into either. So, you're out of pocket $200,000, $300,000 just to go from 0 to your first couple of 100 followers. Okay, let's flip the script. Instead, with Pantheon, right? Let's say if MCG, you guys are one of our main creators, a token project, come to market, 0 followers, 0 visibility. They hand us over 2% of the supply. 1% goes to the Pantheon index, 1% goes to MCG. Now, what happens? You guys straight away give them visibility. They're on your show. They now get visibility and they have your support for 24 months because you're going to track them because they're in your index. You're going to track all of their milestones and growth, and you're just going to update your community. Hey, they've just done this and their yield's gone up. The price has gone up. Congratulations, guys. Your distribution values XYZ bigger now. But also what's happening is they're not just paying to have you align with them. They're actually distributing automatically to your audience. So if you have 10,000 holders, they go from 0 to 10,000 token holders straight away. Instantly on the first month distribution, 10,000 token holders now hold their token, and those 10,000 token holders are financially incentivized to actually give a shit about the project because they want to see the yield going up every month. It's really simple. You can't buy that anywhere in the space. Nothing in the space offers this. It is by far the best go-to-market. And what's happened? They haven't spent a single dollar. They have 10,000 real followers, real investors. They have the support of my MCG. They have all those eyes on them, and they haven't spent $1. And they're already in a better position than the top 99% of projects in the space, right? They're already a top 1% project as far as those benchmarks are concerned. They don't have to go buy stupid bots to have like 30,000 followers from day one, which everyone knows is bullshit. They just have real investors.
So I'm the other question I had around this was with regards to the index token. So can we look at this index token the same way we look at like a meme coin or like or even a utility project or an ICM token? Like what differentiates the index token from everything else?
Well, for starters, it's non-native value input, right? As long as you guys are working, it's always going to have a new flow of tokens that are increasing the yield. Secondly, it generates a yield. Third, it has its own revenue system that buys back the tokens. That's in trading fees and other little mechanisms that are in this terminal. So if you think about it, right, every single project in the space, they come live, they write a white paper, they build a website, and they promote the hell out of themselves to say one thing, right? Guys, we're going to get distribution and we're going to get revenues so you guys can generate a yield or return on your investment. 99.998% of them never get there. You guys, with your MCG index, have that from day one. You have distribution, you have yield, non-native, non-dilutive, sorry, because it's not your token that's going into the index that's like inflating your token. It's other people's value inputs going into your index. Plus, you have the revenues from the trading fees and all the mechanisms in the terminal. You're already better than every other token out there. It's done.
And so is this
sorry, you go.
And is this chain agnostic? If we saw something doing well on base, for example, could we get that into our index?
Yeah, absolutely. We're multi-chain.
And how does that look for the user claiming? Do they just input their multiple wallets, one on ETH, one on Solana, one on wherever else?
Correct. So if you think about our dashboard, it's just an interface that captures the data endpoints from all the different wallets and stuff you guys have.
Okay,
Nice.
cool. I guess my next question, it would also be when it comes to like the ceiling of the token. This is one thing I've struggled with ICM tokens, right? So you have something like AI or data companies, which are very hard to value because there's no real true ceiling or no historical way to value some of these things. So these growth markets, can get very overvalued very quick, and you can find really good upside on them if you can get in early. Whereas some of these ICM tokens, they have real company revenue. You have a measurable amount of money or value you could generate to a token. When you look at something like this, the vault has, in this case, $576,000 in it. Would the market cap, outside of some people speculating on a little bit of growth, ever really exceed the vault amount?
Yeah, okay. So you're talking about speculative value, right?
That's right.
You want speculative value because you want unlimited upside. We want the high beta returns that meme coins can buy without the downside, right? That's exactly what these are. So if you look at, there's this interesting sort of transition. We're finally seeing the crypto space sort of talk about revenues as a meta, right? Revenues are important, blah, blah, blah. Yeah, no shit, it's a business, right? If you don't have revenues, your only facility to make money is to dump tokens. So why should anyone buy your token?
Right.
You have operating expenditures, blah, blah. But here's the catch, right? And you've pointed out, to be honest, I haven't heard many people talk about that. The problem is, even projects that generate a revenue in crypto, they don't really want to disclose it because the second you have a revenue line, you now have a price to earnings ratio. And you could generate $1 million in your first year. And in the real world, that is a fucking remarkably successful feat, right? To go from $0 to $1 million in revenue for a business. In crypto, that's super boring. And the hardest part about that is if the next year you follow up with like a 30% year-on-year growth, which is absolutely amazing. Hey, bud. Which is absolutely amazing. My son, he's got exams right now, so I'm on his case, writing him like crazy. But if the following year you have 30% year-on-year growth, which is amazing by traditional business tactics, right? It's terrible in crypto. Like, what? You're going to give me a 30% ROI? I'm in this for like 3,000%. So you've nailed it. But the way ours works is simple. For starters, you get a baseline. Now I'm talking baseline minimum valuation, which is a price to earnings ratio based on the yield you're generating. And the formula is really simple, right? We can look at every single other yield generating platform in the space. DeFi, for instance, Lido Finance, it operates at like a 65x price to earnings ratio relative to its yield in FDV. And the formula is really simple. Your FDV should equal your yield divided by your APR times the percentage of people that are staking. right? Because that generates how much yield the user's generating and what kind of demand that drives for the token to drive the price higher, right? Simple. Now, that's the baseline yield. So what it equals is, for you guys, for instance, for every dollar you guys put in your index, you guys should be getting about $30. You're multiplying your value by about 30 in FDV, realized FDV. And as you know how the liquidity and supply shrink works, that increases your liquidity where it's actually real FDV, not just artificially inflated FDV. Now that's your baseline, which is really exciting. So that's the incentive mechanism for creators like you as well to do this. You'd be stupid not to, because you can pocket $10,000 from a single promotion, or you can put $10,000 in your index and it's worth $300,000 for you, right? Simple incentive model that's aligned. But again, that's just the baseline. Now, we have all these supply shrink mechanisms, which changes that dynamic, right? So the rate of the supply shrink, available tokens relative to the yield, drives the price higher. But the real kicker is the velocity of your interest, of your yield. So let's say 1 month you add $100,000 extra into your vault. The next month you add 400,000. The velocity has changed, right? As the velocity changes, the speculative bid goes higher and higher. And now I'm investing not just in your baseline yield, but how quickly you increase your yield and how big your influence grows. If you guys get bigger and bigger and bigger because your community is more and more active with you, your deal flow increases, which means the value of the yield you guys input into your vault gets bigger and bigger, faster and faster. Now you're a real growth engine with 50, 60, 70x upside.
Interesting.
And the best part as well is, you guys, as long as you guys don't stop working, your index is never going to run out of value. So bull or bear market, it doesn't matter. Sure, the assets are going to price down, but in a bear market, you're adding more yield at cheaper rates, which has more upside. So you become like this accumulation vehicle over bear markets. Over bull markets, you're just crushing it.
So are you guys, from a BD perspective, are you guys thinking about stepping in and being some sort of middleman aggregator? Yeah,
absolutely. Yeah. So we're supporting. So our model's simple. Communities aligned with creators, creators aligned with clients. Now you guys all have a win-win-win relationship. For the projects, they just don't fuck up. Now you've got the support of thousands of community members. You have creators supporting you, watching your every move. Just don't flood the market with tokens, and make sure you just build your business. Simple, right?
And this is all trustless, correct? Like, this is all permissionless. This is all this doesn't need anyone's say so to operate.
No, all permissionless, correct.
Got it. And I interrupted you. I'm sorry about that. Please continue.
No, you're good, man. Sorry, where were we though? We were talking about, okay, yeah. So that's exactly what we're doing. So we've got a very aggressive BD side right now. So we win if creators win, if communities win, and clients win. Really simple, right? So all we want to do is make sure you guys all succeed. And the best way to do that is make sure we're introducing the best projects to the best creators. Now we're curating our first bunch of creators. And I'll tell you why, because the mechanisms in our platform heavily favor the first creators who launch their indexes. In fact, we should probably go through that just so you can see some of the functions, because all we've talked about is the actual asset themselves and then launching them. But really, like I said, we're all about what happens afterwards, right? So I can show you that in the terminal. Okay, so if you think about launch pads, they're all about hyping up a project until it has its TGE. Guys, this is an amazing project. You got to invest. It's going to be so bullish. TGE happens, and then what happens? It's all over. They don't give a shit, right? They have no accountability for post-market performance. It's just, oh, that was the project's fault, right? But the value of a launch pad exclusively relies on its return profile. So the most important thing for a launch pad isn't what projects they bring to market. It's how well those projects perform after market. And that's all we're focused on, really. That's why, again, success primitive. What happens after TGE? Let's make it perform. So not only do we have the launch pad, we've got the creator indices, our first two innovations that are the first two pillars. The third pillar is the terminal. And our terminal, which you can see here, is not just tailor-made to help you manage your token and growing community all in one single vessel, one single operating system, but it specifically functions for two exceptional purposes. First is increase yield and value of your index. Just all these mechanisms to increase the value and increase your yield as fast as possible. And the second is total supply destruction. The idea that we're just tugging on the supply demand levers to drive, accelerate price and price floor to reduce the risk of the asset while increasing the return profile. And I'll give you a few examples. I won't show all the juice because it'll take us a while. But first and foremost, MCG. Okay, you guys have your index live. You got 10,000 community members, and they're all interested in all the projects you bring to market. Now, the first way you can increase your yield through this terminal is clicking the Pantheon here. This is actually an ICO platform. So if we look at launchpads, right, the first thing they ask any project is, okay, how many followers do you have, and which creators are you working with? If you're not working with creators, they say you have to, and they introduce you to some, or they ask you to go get your own because they need hype. Now, the question is, if launchpads need creators in the first instance, why do we need launchpads if we already have creators? And that's what we've done, right? Because launchpads are really just a single venue that has a group of investors keen to invest. But that's exactly what creators are already. So what we've done is we've turned creators into ICO platforms. So you guys can run. So you could partner up like 3 or 4 other guys, other creators that have a nice big audience, and together you guys bring tokens to market. And instead of charging all these upfront predatory fees and all these pointless AMAs that really just rely on creators anyway, you just say, hey guys, give us 1 to 2% of your token supply, go straight into our vault, vested over 24 months. Now your vault, your yield's gone up, your vault value's gone up, your index value's gone up, a bit of the supply shrunk, and your community got access to a new project at pre-market rates. So that's obviously huge for them. Now, the same applies to creators. So you guys could be like the top dogs on the Solana ICM sector, and you guys can launch creators underneath you. Say, hey guys, we'll give you exposure to our audience, but all you want is 1-2% of your tokens to go into our vault. Now you guys are like a master proxy investment vehicle for every other ICM project and creator in the space. Your coin will just skyrocket then, right? Because now you're getting a percentage of the efforts of all these other projects and all these other people. Now, as for the BD side, we've optimized that too. Everyone knows how frustrating it is for businesses and KOLs to connect and then negotiate. Businesses just have a portal. They log in here and they just publish what they're looking for. Hey, we want the top ICM guys with at least 10,000 followers. We'll pay $5,000 per head. And it just gets broadcast to all creators. Now, all you guys have to do is click accept. The money goes straight into your vault, and you guys publish
That's pretty cool.
Super simple. And this is just one of the ideas. So this is just a billboard. So this particular one is exactly what's printed here will automatically post to your profile if you want to just do that. This one's structured. So it won't automatically post. You have to approve and all that jazz. Money's held in escrow. So that's just 2 of the ways it simplifies all of it. So now you guys can just promote, and boom, $50,000 of USDC is just flooding your vault. And when you got USDC flooding your vault, that helps your bear market. That helps you during the bear market, right? Because now you become a real yield generating vessel. Same with tokens. Okay, so that's just a couple of them. Now, if you guys want to launch another token on a different chain, you can too. And again, that goes automatically into your vault. You can decide where it's split, liquid vault. You can monetize your own BD funnel. So if you got people that want to be introduced to other projects, everything, once your token's imported to this terminal, everything's priced in your token. And it's all designed to, again, shrink supply or increase yield. So you can now monetize your network. You can auto route deals, deal flow between Liquid and Vault. You can launch an NFT collection for your community, exclusive merch, AMA access. You can have community access rules, so burn 1,000 tokens or stake 5,000 tokens. You can now launch digital products, simple as writing the name, pricing in your tokens, service, and explaining what it is. So like one-on-one strategy sessions, exclusive Telegram access, anything you can think of that's going to benefit the community or other businesses, you can do here, and it all is designed to burn your token supply. Then there's liquidity. There's a bunch of other things, airdrops and stuff, but like I could go on for hours here. The main point is it's all designed to just totally increase the value of your token while burning as much of the supply as possible. And people can like go on and on about all their cool ideas and narratives around why their business one day will be successful. But the fact is, it all comes down to supply and demand, right? As long as you got more demand than supply, your token's going to go up. And what we do is just crank that lever as hard as possible to like reduce supply and drive demand. Simple.
Got it. And so this index token that's connected to the overall index, as you as a creator using MCG as an example, that also changes in price. So essentially users can also speculate on the price of an index token based on the level of influence of the creator.
Yeah, oh man, it gets crazy there. So we were talking about the speculative value before, right? So think about all these different valuation metrics. One is the price to earnings ratio of your yield. Two is the composition of those index, as in, okay, there's 100 different assets in here, and then they start investigating each individual one to figure out which one's going to go really big, because that would change the total value plus the total yield distribution value. Right. So some of these projects go bullish, then wow, if you guys have curated it nicely. Then there's also your influence. As you guys swell, so does your deal flow and influence and access to more projects. As you guys like move, you can make different moves, like ship into different ecosystems, jump on a new like concept like robotics, make some new breakout there. All of this changes the speculative value of your token.
Got it. And you said that creators on the platform would also earn the trading fees on their index token.
Correct.
So how are you guys generating revenue from all this? What's in it for you guys at this point?
Yeah, exactly. So that's why it's a win-win-win, right? We're just a fee. We're just like an exchange. So the more successful you guys are, the more fees we generate. Simple.
And what's the fee breakdown there?
So it's basically 5% of everything you see.
Got it.
Not the trading fees though. The trading fees just point. Obviously, it's just a few bips.
Got it. Cool. Dom, any questions?
Yeah,
that you
I
got?
I think the next thing would be, what does the conversations with launchpads look like? I think if you took this to launchpads and then they maybe shared some of their top creators with you guys, what does that look like? Is there a way you could integrate this into, I don't know, call it SOAR, call it Believe, call it MetaDAO, whatever, the big launchpad is? Is there a way that this terminal can just be natively integrated there so that these projects can funnel their launches through here, and then the
Yeah,
creators can
exactly.
also
100%. So we don't actually want to compete in the launchpad space. We're all about post-market, right? We just want to help projects perform better and creators swell their earnings for the community. So yeah, we integrate perfectly with launchpads. They can import their tokens, so they can have their big successful ICO, and then that company can actually import their token into our terminal. Also, obviously, take advantage of our creator indices by getting long-term creator support without the sell pressure. So that's the space we want to live in.
How those conversations been looking, and have you been having them, or what does that look like?
Yeah, so our BD we haven't started with launchpads, but we're going to in a minute. Probably start in the next couple of weeks, to be honest. But we've been focused mainly on the foundation side. We want to work, so we're getting the sign off from the larger ecosystem chains first, top-down approach. Hey, these guys have looked at us. They understand we're legit. They're providing deal flow and introductions to the best project, because it's all about finding the best, right? We want the best projects that have real longevity baked into their business model.
Yeah.
So we started there first.
Makes sense. Maybe, what about tokenomics? Are you guys going to have your own token or your own index? How's that look?
Yeah, so we are going to have our own token. This eventually has to be totally permissionless, and I'm a guy that believes in the whole decentralization spectrum. I'm a full-on wannabe cypherpunk, so eventually I want the community to dictate everything, but obviously growing pains, right? You don't want to start there. But first and foremost, we're not launching a token yet. I want to go live, prove this whole revenue model scales, and get our first few creators up to decent valuations first.
Where do you or I should say, when do you guys see yourself going live with this? I know you might not want to get into specifics, but as much as you can.
Oh yeah, we're going live in the next couple of weeks. We've already got so we've got about 20 something creators now who have submitted to. We're curating our first 20 creators. Like I said, we want to make sure they're the top. And we want to cover all ecosystems first, but yeah, our first 6 are definitely locked in. Starting off small, really humble valuations, but a lot of them already have like a lot of yield already generated. they've just gone back. So if you imagine for projects, right, as soon as you say, hey, I'll support you guys for 24 months, it's not going to cost you $1. You just have to give me some tokens, and they're vested over a 24-month period. Projects just sort of jump at that. So these creators that we're working with, they're already talking to projects, they're already getting the yield. So when they go live, they're already a yield positive asset. So that goes live next couple of weeks. All we're waiting on is we have distribution partners now. So not only have we built the product, but we're actually building the distribution network to make sure that all the projects that have the opportunity to can scale through larger investors, larger distribution channels, trading groups, and those sort of things. So we're just aligning everyone there to make sure that we've got like our little AMA circuit, our visibility circuit, and then our distribution and trading vehicle too.
Have you guys talked to like liquid funds that might want to launch something like this, like a broader base index that's available to everyone?
No, we haven't yet, but it's a very good point. And should like our BD's really been like it's pretty busy. You know what it's like to just book in your schedule, your calendar these days. And because we're a brand new primitive, it takes a little bit of education first. And honestly, a lot of the projects we talk to, they love it, but they think, well, where's the catch? It's a scam. Like how do I get these creators for 24 months when most creators ask for $10,000 for a single post, you know? So it's just helping them understand the values systems for each actor. Once they understand that, they're like, oh, okay, I get it. They get to monetize through their own token by leveraging my token for yield. Simple.
I guess that's the biggest struggle, right? It's proving out this new structure and having people get on board. Once you can go from 0 to 1, I think that's like the hard part's maybe behind you.
Yeah, absolutely.
So tell us a little bit about the team. I know you mentioned it's just kind of you and some of your partners. Like, you know, what's the makeup of the team right now? How big are you guys?
Yeah, so well, we've got 5 in the core development team. We have and everyone else that oversees it, they're all senior level people that oversee on a contract basis. So the idea is to keep it as light, as lean as possible, and then just bring in full teams when we need to do certain sprints. But our BD is the most important thing. So, you know, we've got Tony Ansel from, I don't know if you guys know, like Anthony Scaramucci and stuff from Cointelegraph.
You got Scaramucci on there. No way. Okay.
He's my man, dude. He's just awesome. Man. He's a top guy. Mizzy's our creative director. I'm not sure if you know Oryx Mizzy. Mizzy's World from Catalyst OG. He's a creative guy. I'm just trying to name names that you guys would know. We've got Jonathan from Mave. He's also a PR specialist. And most of us are focused on BD, business growth. Our core development team, we've got Brian, who oversees he's the CTO, and he's from French Finance, total genius. And we've also got his son, Alex, total genius again on smart contracts and blockchain. My background's obviously the economic architecture and tokenomics. That's where I add value. And the rest are contractors.
Wow,
nice.
Seems like quite the team.
And this is Anthony Scaramucci, like former White House communications director Scaramucci, right?
No, from Cointelegraph.
I must have got
that.
Okay, got it. I'm like, I wanted to clarify that. I'm like, is that the same guy I'm thinking about? Okay. Okay, cool. I'm glad I clarified. Okay, cool. Well, I think we got a ton of information. This was an excellent presentation, excellent product. Like I mentioned at the start of this interview, it's something that we've never seen before, and I think it aligns incentives in such a way that helps just the industry to grow in a much more sustainable way, especially with how much saturation there is with tokens on the market. So again, love the product, love what you guys are doing. Excited to see you guys see what you guys build as you go live over the next few weeks. But as we wrap here, any closing thoughts? Anything you want to leave the folks with? Anything you want to say to get them excited?
No, I just think we should be excited about the shift in behaviors and the mindset now. Everything's sort of converging back to value, right? And something like this is just really important for the space. I guarantee a lot of projects are going to sort of copy some of our model because it just makes a lot of sense. And honestly, I'm all for it because it just improves the whole ecosystem, right? Sick of seeing 99.998% failure rate. It's ridiculous.
Absolutely. Well, we appreciate you coming on as always. We are excited to watch you guys make it happen. So we'll keep in contact, and best of luck to you.
Thanks, guys. Pleasure.
Appreciate
Thanks for having
you, Paul.
Thanks
Take
for
care.
coming on.
Of course.
See you guys.